Hey, welcome investors to the 40 Finance channel. Today we're talking about Affirm stock. This one just did a rocket ship up. It's on fire right now. Huge earnings report. And Affirm is a buy now, pay later service provider. So whenever you read about Affirm, you're going to see BNPL, that stands for buy now, pay later. And what Affirm's been able to do for their clients is boost conversion rates for websites like Peloton and Expedia and StubHub. They boost the conversion rates for those clients because they offer consumers interest-free payments for their purchases. So literally buy now, get it today, whatever. And then you can break those payments up, and there's different options, 4 months, 6 months, 12 months, all interest-free payments, assuming that you make your payments on time. And at least here today, Affirm's trending towards a peak, like all the headlines are positive. They announced that they have secured a test on the Amazon platform. They just paid $65 million to be the exclusive BNPL provider for Shopify. So they've got some big names swirling around it. The question is this the best way to play buy now, pay later in the stock market? That's what we're going to talk about when we look at Affirm. All right, so here's a quick look at the headline that's driving Affirm today. Stock price is up about 25%. We'll get to that in a second. For the 3 months ending June 30th, top line revenue came in at $262 million, up 71% for the year, far outpacing the street expectations. And then guidance for the current quarter was also better than analysts expected. Within the earnings presentation, Affirm said active consumers grew 97% to 7.1 million last quarter. The growth rate marked an acceleration from the year-ago customer count of 3.1 million, which itself was up 77%. And lastly, you had gross merchandise volume, which is always important in e-commerce land, grew by more than 100% to $2.5 billion in the quarter. And another important thing that came out of this earnings report was the fact that there are now 29,000 active merchants on the Affirm platform, which represents 412% growth. But most importantly, Peloton, who was their largest merchant, I think it was like 30% last year, they dropped down to 9% because the number of merchants grew. So Affirm offers a couple different things. You can see here, 71% of transactions are done at point of sale. That means right in the partner's website. So if it was StubHub, for example, you don't necessarily go to Affirm. You can check out right there. But they also have their own website where you can discover merchants who accept BNPL. And so just simple math, if this one was 71%, you got 29% that are coming from the platform itself. And that to me is important for Affirm because when they're pitching their services, yes, they can boost conversion rate, but then they also have this discovery engine. We'll see if that continues to show growth, because I think it's important if you can bring new customers to a platform. That's what a lot of merchants are going to be looking for. All right, taking a look at the stock. Price today, $117. That's up actually 28% on this earnings news. This stock did not premiere until January 13th, so we only have a limited amount of data. It's a year-to-date chart. You see you did start to get a 50-day moving average become measurable. And Affirm's went through some ebbs and flows. Obviously, it came out on fire. Then we had some weakness in the market itself heading into May 15th, and it dropped down quite a bit. Looks like perhaps $48 might be the low just by looking at this. Now you're up to 117. You got an RSI of 76, which is remarkably higher than you would have seen back in May at about 31. So this is definitely a momentum stock where it sits right now. The price is being pushed up by momentum and headlines. And so that's one thing to keep in mind as we talk about perhaps some of the bear cases for Affirm. Now, the last time Affirm made a big move on the chart we just saw was this announcement that Amazon was going to test Affirm right in their checkout. And Amazon, obviously, you want to talk about gross merchandise volume, they are certainly the biggest. Now, we don't know a ton about this deal. We know that it is a test on the Amazon side, so it remains to be seen how this goes out. Although the Affirm payment option is only being rolled out to select customers, the long-range plan is to extend the benefit to more customers in the months ahead. So more customers does not equal all customers, at least the way I read this. So there is a little bit of cautious optimism here. The other thing that comes into play is on the Shopify side. We talked about Affirm rolling into Shopify. They paid a $65 million sort of sponsorship fee or integration fee to do that. We don't exactly know what the financial details of the Amazon deal are. It would be a huge win, but what will Affirm have to pay to get into that marketplace? Those are some things to think about. Some of the other things to think about if you're interested in Affirm stock, and you see this headline here, for every positive headline that comes out about Affirm, I would say there's a subsequent competitive headline somewhere else. And we're not going to go through all these articles, but I just want to give you a gauge of what's going on in this BNPL space. So obviously here you see Square has agreed to purchase Afterpay. So any merchant that was using Afterpay that perhaps Affirm could have went to those clients and said, hey, Afterpay is giving you this, we'll give you this. I would say all those Afterpay clients are off the table now, and Square will, of course, be driving to build their business. On the PayPal side, PayPal just purchased a Japanese buy now, pay later. Granted, that's just for their geography at this time, but it'll be interesting to see what they do with that technology. And while this headline for PayPal is focused on this Japanese market, they've always had a built-in option with their already large merchant marketplace for the customer to opt into making payments. So while Affirm gets a lot of headlines for building their new buy now, pay later, PayPal sort of already has it built in. And where my mind goes as a PayPal stockholder is maybe PayPal needs to feature that more or somehow get it to show on their merchant websites a little more clearly. Certainly they should consider reaching out to their merchants and saying, hey, we have buy now, pay later too. How can we work together on it? And then on the Amazon side, ironically enough, they just had a leak that they might try to make a POS system for small and medium-sized businesses. That would kind of infringe on PayPal and Square's territory. Not to mention, you have to wonder if you're a Visa stockholder like myself, which rail system they would use in that case. So while Affirm has signed on with Amazon for the test, how big does this Amazon Project Santos get? It's hard to tell, and would the Affirm relationship be temporary? I'm not sure anyone can answer that right now. Then on the Apple side, which, with Apple Pay, they're partnering with Goldman Sachs to launch Apple Pay, or Apple Pay Later, which is a BNPL service. So Apple's coming into this market and looking to grow their own service as well. And lastly, on the bear side, Reuters came out with this article on September 9th. They say a third of U.S. users are falling behind on their BNPL payments, and that is where interest rates start to come in. So the study conducted by Qualtrics surveyed 1,000 adult customers last month to measure their interest. 44% had used these services. More than half of Gen Z or millennial respondents said they had missed at least one payment. That compares to 22% of Gen X. And there's also a call out in here that the growth in buy now, pay later has led to more scrutiny from regulators who aim to ensure customers do not take on more debt than they can handle. So that's something to keep an eye on too. All right, so where does Affirm stock go in the future here at 117 today? I think the truth is it's hard to get a handle. This company's growing so fast, it's hard to get a handle on how far they can take it. But if we just look at consensus from what we know now, there's not going to be a lot of data on EPS estimates because the company is not profitable. June of 2023, if we look out that far, most analysts have them coming in at minus 38 cents. So at least from this limited data set, it would look like profitability is probably closer to 2024, maybe even beyond that. On the revenue side, this is where most analysts are coming together. So June of 2022, that would be this fiscal year. Their 2021 fiscal year just ended. So they themselves provided the guidance of $1.16 billion, 33% growth. That puts your forward price to sales at a 21. Looking ahead beyond that, you've got revenue estimates of plus 32, maybe plus 21 if you believe anyone can predict that far in the future. So it's going to take a while to get this price to sales ratio down. Even if they hit their numbers next year, you're going to be at 15.8. All right, so just for fun, let's stack this valuation up against some of the other stocks in the space. We've got Square over here, PayPal. I put Shopify and Visa in there. And our 1 year forward non-GAAP PE, obviously Affirm's losing money. You got Square at 134, PayPal at 60, Shopify at 228, Visa at about 40. If we get into GAAP PE, then you start to see Square at 336, PayPal at 81, Shopify at 86, Visa at 41. Price to sales trailing 12 months. Affirm at 12 times, Square at 7 times, PayPal at 14 times, Shopify at 47 times, Visa at 21. Now, from a growth perspective, this table here kind of aggregates some data, but let's talk about revenue growth forward. Affirm coming in at 44.73%, Square at over 100%, PayPal at 21%, Shopify at 57%, Visa at 7.69%. And then on diluted EPS growth, which, Affirm's not going to be able to play there because they're not profitable, but Square at plus 42%, PayPal plus 24%, Shopify, look at that, triple digits, plus 178%, Visa coming in at 10%. So when we kind of compare these stocks, I would say right now, if you're buying Affirm at 117, you're expecting them to significantly outperform their revenue numbers, gross merchandise volume, more than even what's predicted here today. All right, taking a look at TipRanks to see what the best performing analysts have to say. It's always nice to do this after an earnings call because you get a lot of fresh updates. Yesterday. We'll stop with those. We've got 1, 2, 3 buys, 3 holds, and you got a price target. Let's see, here's your high at 150. That would be plus 32% from today. And the low looks like 105, which is a 7% downside from today. All right, so is Affirm stock the best way to play the BNPL revolution? Not for me. And quite simply because I think that there's so many other stock market alternatives. I think it's amazing what Affirm is doing, but when you sit in a stock room and you look around and you can find your PayPals, you can get into Apple. If you want faster growth, you can get into Square, and arguably you could even get into Shopify. If you were bullish on BNPL on Shopify, then it probably just makes sense to own the platform as opposed to the payment service provider, but that's just my 2 cents. And on the outside, you could even make the argument like, hey, then there's Amazon. You better believe that Amazon's not going to let Affirm come on for 100% free in this deal. They're going to get their cut. And then, of course, you've got the Amazon POS system. Will they just kick Affirm to the curb if that comes to play? Really hard to tell right now. All right, so I don't have a price target for Affirm, but I would say right now there's much more risk to the downside on this one, and any little negative headline that comes out is going to easily chop 10% off the stock price. So if you are interested in this one, I would say 117 is not going to be the best time to get in. It's just too hot right now. The people that are doing well are probably the ones that bought in 2 weeks ago prior to the Amazon news. All right, guys, so that's a look at Affirm and all the other BNPL providers. Hope you enjoyed it. Please give the video a like, share with your friends. Thanks for all your support. We'll see you on the next video.